Hi there, Peter. Thanks for being with us. So how will this new scheme work?
Look, it's been in place for many years now. In fact, it just became a more attractive option overnight with a reduction in the interest rate. But essentially, this scheme is, if you like, a drip feed loan where people can get a fortnightly supplement, either in addition to their Centrelink payment, or if they're not on Centrelink, then they can get a bigger payment still, but it's a fortnightly payment. And that is essentially a loan secured on their home from the government.
So who will this scheme be open to, Peter, and what difference financially could it make to people?
Look, since 2018, the Turnbull government really widened the net for eligibility so that anybody who is above pension age, so above age 65, 67, and who is an Australian resident and who has some equity in their home, they are eligible to tap into that equity via this scheme, which has also been rebranded overnight as the Home Equity Release Scheme. But it's a broad cross-section. They've changed the name of it from the Pension Loan Scheme to the Home Equity Release because it's not just available to pensioners, it's available to anyone who meets those three criteria I mentioned.
Is there a minimum amount of equity you need to have in your home to access this scheme?
Look, I don't know. It's a good question. Most people who are pension age tend to have a large bulk of equity in their home. Even if they hit that age and still have a residual mortgage, most people at that age are having the bulk of their equity in their home, even if they don't own it outright.
Yeah. OK, so the important question then, what are the things to be wary of, Peter? What are the potential pitfalls that you have to watch out for?
Look, there's a guaranteed right of abode in the home till people die. There is, from July 1 next year, a no negative equity guarantee. So the most you can have to pay back is the sale proceeds of the home. I can see there might be some fairly robust discussions in family as to whether people choose to draw down the additional income now to improve their lifestyle, and how much they want to leave as an inheritance as well. So there'll be some robust conversations along those lines, I suspect.
So is there then a typical scenario where this will be a good way to go?
Look, I think, if for anyone who wants to come out of COVID and perhaps visit people overseas, visit grandkids overseas, anyone who wants to just increase the quality of their life with a little bit of extra expenditure, this is what that scheme is probably well directed towards. And as of July 1 next year, when legislation passes, limited lump sums will even be available, up to, I think, $12,000 a year for a single or $18,000 a year for a couple. So that will change the game as well a little bit.
And in general then, Peter, how popular are reverse mortgage schemes like this?
Look, since the Turnbull government introduced them in 2018, there was a 10-fold increase in the subsequent 12 months. And even since then, there's been another 5-fold increase. So I think the government is probably encouraged by that. And with the reduction of the interest rate for these schemes that they've announced overnight, I think they're trying to surf that wave and encourage more people to tap into their home equity and improve the quality of their life.
Peter Thompson from the Financial Rights Legal Centre, thank you.
Thanks, Roz.